This is a topic that is being discussed heavily in the crypto community, and understandably so. I'm seeing a lot of varying opinions, so much data, different patterns and trends with all these theories, and that's all fine. But what's important to note is not a single person knows what's going to happen, guys. This is purely all speculation. We can use data points and trends to try and gauge an idea and make an opinion, but no one knows for sure. It's just a good discussion which can bring about different perspectives and ways of thinking. Please remember that before you go around gunning guys down for their opinions. What's up, people? I hope you're doing unbelievably well. Today's video is on the 4-year cycle theory and why it may be dead in the water. We'll go through what it is, why it's even a thing, then we'll take a look at how this cycle is different and what we can expect going forward. I appreciate you clicking on this video and watching. If you could subscribe to this channel and join the free community down below, that would genuinely mean a lot to me. Thank you. So the 4-year cycle theory. I'm sure most of you watching already know what it is, but if you don't, let me show and give a brief overview. It's built around Bitcoin's halving cycle. We know that every 4 years we have the halving event for Bitcoin. This is where the reward for mining Bitcoin is halved. So it started at 50 at Genesis. You earned 50 Bitcoin as a reward for mining the block. Then it reduced to 25 in 2012, then 12.5, then 6.25, and now currently it is 3.125, following last year's halving event in 2024. I also probably didn't need to list all of that. I'm sure you all know how to halve. Thinking economically, it's a very simple concept: supply and demand. Every 4 years, the supply of Bitcoin entering the market is going down. With consistent or increasing demand, this is of course going to increase the price and cause a surge. Historically, the top for Bitcoin comes 12 to 18 months after the halving event. We can see all of that here illustrated on this chart. The halving in 2012 led to a top in November 2013. The halving in 2016 led to a top in December 2017. And as of the most recent cycle, from the halving in May, it led to a top, well, 2 tops, but the most recent one in November 2021. One thing to note is the amount that Bitcoin pumps has been decreasing significantly, but that's to be expected. An asset worth a few $1 million will be much easier to move in price compared to one worth trillions. We all know the whole past performance doesn't guarantee future results BS, but you can see from this chart and the data why people, including myself at times previously, gave the 4-year cycle so much weight. I can't speak for every cycle, but I remember in 2021, right in the peak, people saying it's not going to happen again, that we're going to deviate. In Q4 2021, it really didn't feel like the cycle was going to top, but I guess that's the whole point. Obviously, each cycle we have the certainty of the supply shock and demand tailwinds which occur as a result of the halving. They're pretty much guaranteed. But this also establishes and builds market psychology and technical frameworks. Traders and investors build models and expectations around all of this, which has contributed to the consistency too. You can also see how long after the top we bottom, hence there is always a depression and accumulation phase in all of this as well. Most recently being in end of 2022 going into 2023 for the current cycle, during which is when I personally accumulated the most. It's also pretty clear why a lot of people are sweating right now, saying that the cycle is done. Bitcoin pumped to about 125k in a similar time frame after the halving as we've seen previously. So purely based off of this, it does insinuate that we have topped, especially given the recent price action and Bitcoin's weakness. However, most may not understand what was going on behind the scenes for each of these cycles. I've seen people attribute it just as simply, it's the 4-year cycle or a major event like COVID or the FTX collapse, which technically aren't wrong, but the macro backdrop is often overlooked. Quick break to ask, why are you not part of the best free community in crypto? Join over 1,000 people determined to make money and help each other out. Sign up to the email newsletter too. It's all free. You've got no excuse. Link down below. This table shows what was happening macroeconomically during each period and why it resulted in a blow-off top. You can pause and read, but I'll give a quick explanation on each. So Bitcoin launched in an extremely liquid environment following the 2008 financial crisis. Huge quantitative easing, very low rates, and this hung over into the 2013 top. The crash and downtrend came when liquidity began to dry up and the Mt. Gox collapse also spread the fear, especially back then when Bitcoin was extremely new. In 2016, we had Trump as the president, and as we know, he was very good for the markets. It was a risk-on approach initially. There were massive tax cuts, but QT began in 2017. We know that this reduces the liquidity in the economy. The Fed also began to increase the interest rates. So after the final QE tailwind in 2017, the crash and downturn came again, and that was the end of that cycle. QT ended in 2019, and this is when I just happened to be getting into crypto. Then we had COVID, and we're getting more recent now, but we all know what happened here. COVID crashed the markets temporarily due to the shock, which was a great buy opportunity, by the way. And then we had massive, humongous even QE and 0% interest rates. It resulted in record M2 money supply growth. This was happening on a global scale. The US were also handing out stimulus checks. It was just nuts. But also, what's not really quantifiable, but definitely played a part, was people were stuck at home. They were on lockdown, on furlough, not working, so naturally looking to make money online. And as a result, crypto benefited hugely. Just the overall environment was perfect, which is why we had the craziest alt seasons, not one, but two. Then we move into the current cycle, and the post-COVID inflation spike began to hit in 2022 and 2023, extremely high inflation, leading to aggressive QT and significant rate hikes. This obviously drained the liquidity, turned us from a very risk-on to a risk-off approach, and mixed in that, we also had events such as the Luna crash and the FTX collapse as well. Bitcoin dropped from 70k all the way down to 15, and we only really began to pivot from this recently. And by recently, I mean, as of now, we are still in a QT strategy that will end in a few weeks on December the 1st. The first rate cut came in September 2024. We had ones at the end of December in 2024 as well, but throughout all of 2025, we've had none, up until only the last two meetings in September and October. So yeah, it's been a very weird time for Bitcoin. Normally, when it's in its 4-year bull peak, 2013, 17, 2021, and now 2025, these years historically have been in expansionary, risk-on, liquid-friendly environments. This has been the first time where the end of the cycle has coincided in a QT, restricted liquidity, risk-off setting. Of course, that is about to change though. All of this kind of implies, which I have said before, that liquidity is the main driver for the markets. We can discuss the major events like collapses of exchanges or sentiment or developments in the space, sure. But from this, and from a common sense perspective as well, liquidity is king, and kind of explains why altcoins in particular have been suffocated recently. Which leads me on to how we have been deviating from the norm this cycle. Firstly, as already seen, we hit an all-time high before the halving. This has never happened before and implies that price action was front-running the supply shock. Perhaps it's a liquidity-driven cycle again, as already discussed, meaning it's tied more to central bank policy rather than block rewards. This could lead into an extended bull run going into 2026, with shallower corrections in the future too, no longer the 50 to 80% drops we've seen historically. Or, let's keep it real, it could also mean that Bitcoin could top sooner than usual, maybe even already doing so. Each halving could also have less of an effect. Diminishing returns means the cycles lose less intensity each time. Linking to this, we had the introduction of ETFs this time. This opens up Bitcoin and Ethereum to institutions, retirement funds, traditional investors, all of which struggled with the regulation or difficulty in accessing crypto. ETFs have created constant inflows driven from major institutions like BlackRock, Fidelity. In theory, it should reduce the volatility, create fewer panic sell-offs, and drive Bitcoin into being more of a macro asset than crypto. More demand, more access, more legitimacy. Not necessarily resulting in a break in the 4-year cycle theory in isolation. I'm sure there have been groundbreaking developments for Bitcoin each cycle, but this is definitely the biggest to date, and if it had a significant impact on the theory, no one can be surprised. These were approved in January 2024, which could have, and most certainly did, result in mass liquidity, causing a new all-time high before the halving. Geopolitics is an interesting one, and I think it's worth mentioning. The tariff wars we've had this entire year from Trump's cabinet caused huge panic and sell-offs. We saw equities crash considerably, but through crypto the reaction was kind of mixed. Bitcoin dropped, of course, but not as significantly as you'd expect, and it recovered very quickly, going on to make new highs later in the year. The issue was with altcoins, they got fucked, to the point where even today, some have barely recovered, if at all. I don't want to put too much weight on this, as we have seen a bounce in the stock market and Bitcoin since. Both have recovered and created new highs amidst the chaos, so maybe this isn't a determining factor. However, the counter argument to that is whether Bitcoin is in its own separate asset class now, which could very well be the case. And this event is attributed to the altcoin drawdown. But also, I'm sure we've had these kind of events in the past as well. The initial 2018 US-China trade war also caused havoc and market sell-offs. But this wasn't the sole driver of the crypto bear. The ICO busts were the main attributor there. Also, this came in a year post the bull peaks, not during, so difficult to make comparisons. However, with the S&P 500 hitting new highs on a regular basis this year, risk assets clearly haven't been killed off by the tariffs. It's just something to ponder. I want to briefly touch on the government shutdown as well, the longest in US history now. It's delaying key data release, which has knock-on effects for central banks and investors, overall dragging the economy. This doesn't necessarily break the crypto cycle, but it creates an environment where policy uncertainty, liquidity risk, and demand weakness all exist together. The longer this goes on, the more difficult it is for us to have a sustained move upwards. This may be coming to an end soon though. Mainly what I wanted to discuss today is the wider macro environment. Many in this space won't get this part, but from a purely economical and logical perspective, it makes total sense. As I've already shown you, in every bull cycle top 2013, 2017, and 2021, these all took place in extremely liquid environments, either resulting from a QE strategy or low interest rates, or both. We have had the complete opposite over the last 4 years. The highest inflation, ridiculously high interest rates, meaning loan repayments are higher, and restricting people's disposable income and ability to invest. The balance sheet, as we can literally see here, has been shrinking for months. Full-fledged QT. However, with the official end to this on December the 1st, how can you bet against prices in this asset class going up? I'm not suggesting that as soon as December hits, we're going to rocket up. I hope we do, similar to the climax of 2017, which this cycle in parts has followed in a similar fashion, but no, realistically, there will be a delay. Honestly, I'm not sure how long. It could be 1 month, 2 months, 6 months. I have seen a few theories suggesting a top in summer 2026. It's very difficult to pinpoint when. All that I know is, given everything that we've discussed, what we're seeing right now and what is yet to come, the end of the 4-year cycle and pushing forward into 2026 is a serious possibility. You all know we've been keeping a close eye on global liquidity as a whole. This trend has been followed extremely closely by Bitcoin this cycle. I'm not going to get into a causation versus correlation debate here. I see it argued often. The trend is just clear to see. This particular indicator includes various M2 supplies and central bank balance sheets around the world, and I've also offset it by 75 days as that seems to be a median time frame on which Bitcoin is following this trend with a lag. You can see how closely we're following this. Now, with lower interest rates and an end to QT from the world's biggest economy, you would expect this trend to continue to go higher, right? And that in turn should drag the price of Bitcoin higher with it. I can't make this video without mentioning Trump's stimmies, the sequel. This kind of came out of nowhere in the last week or so information is still new and yet to be confirmed. What's been proposed is a minimum $2,000 dividend to American citizens, not including high-income earners, as a result of his tariff revenues. The details are still being hashed out as to who is eligible, where exactly it's coming from, is it an actual monetary injection or a tax deduction? My initial feeling is it won't be like the COVID checks, but damn, if it's even half as good as those were for the markets, the fresh liquidity waiting to be gambled into crypto would be insanity. The COVID $1,200 stimulus, if invested in Bitcoin at the time, would be worth 21k today. This doesn't have to be realistic or rational. If people are aware this is what could have happened with their last stimulus check, there will be a significant portion looking and hoping to do it all over again. The billion-dollar question, therefore, is when do we top? And the $1 answer, unfortunately, is no one knows. Even with everything I've provided in this video, we could have topped weeks ago back at the start of October. It's about objective analysis, zooming out and making a prediction. Very simply, I see more liquidity entering the markets over the 3 to 6 to 12 months, and that is the key driver of the price, not just of Bitcoin, but also of altcoins. I've repeatedly said until we see Ethereum break past 5k and start printing serious candles, there'll be no quote-unquote alt season. ETH has held strongly in recent months, but it really needs that next move up. On top of all of this, you may have seen this before, but this is a list of bull market peak signals. Historically, when Bitcoin has peaked in the past, these have been at certain levels or have been triggered in a way. This includes Pi cycle top, alt season index, Bitcoin dominance, MV/RV ratio, long-term holder supply, so many. The most important thing here to note though is not a single one of these has been hit, which is pretty insane given where we are in the cycle. Yes, this is historical data, all of which may be negated if we are truly deviating this time around, but the fact that it's 0 out of 30 is pretty crazy. I myself previously did have Q4 2025 as the peak and the time to exit. If you have made significant profits, definitely take some off the table, which we're seeing many people do. But I'm starting to change my mind. I'm sure there are more factors which I may have missed, which could strengthen the argument for or against the 4-year cycle theory, but I just included some key ones in this video. I hope you found it informative. If you did, please comment thoughts down below. Subscribe to the channel, the support really means a lot to me, and I'll catch you all in the next one. Take care.